Next item, a GSD Financial Series number 4, revenue limit. And I believe we have Viera here. Very good.
I'm back.
Thank you. Welcome.
Thank you. Thanks for having me.
This is tough. After reading all the material I'm looking it over like, wow. I have the benefit of reading it in advance and I'm still a little bit confused. So I think our taxpayers are probably going to be even a little worse off than me. So do a good job.
The thing with revenue limits is they drive so many decisions in school districts, and they are probably one of the hardest things to understand and probably one of the most important things to understand. Unfortunately, we could probably talk about revenue limits for hours. And as much as I would love to do that, we have limited time. So Brittany and I work together to try and find a happy medium of getting in a little bit into the weeds, but also we're really just scratching the surface on revenue limits. And so I would say if you have any opportunity to like if you're down at the school board convention, I know they have revenue limit deep dives for sessions. If you have any opportunity just to get in there, it's not going to be your district specific information, but just helpful as you're building the foundation. So I will do my best to give you as a good start of information. I pulled out some Germantown specific information from your revenue limit worksheet. So we'll review that tonight. This is our second series in a series of 5. So you'll see we're building a little bit off of the Woofer presentation from last month. So not defining specifically when we talk about funds. And then tonight's presentation will transition us very well to next month when we talk about equalization aid and how the equalization aid formula really fits in with revenue limits and starts to impact that. We are here tonight. CESA is here just to help build that capacity for board members and community members, not to influence decisions or anything like that. Tonight, we will talk about what the revenue limit is and what it isn't, go into a little bit how the calculation works, why it matters for budgeting, and then what it means for your district specifically. The revenue limit dictates how much general fund revenue a district can raise. This is not a calculation specific just to Germantown. This is all districts in the state. It affects everything from budget capacity, staffing decisions. It obviously impacts local taxpayers. So understanding the revenue limit and being able to explain the why behind it really, I think, helps create a level of transparency when it comes to talking about your finances. So let's first start with kind of grounding ourselves in what that revenue limit actually does. So when we talk about that, what is the revenue limit, and just bringing a little bit more understanding to that. What is a revenue limit? I like to think of it as a pie. I think that's the kind of the easiest analogy. And this is Germantown's actual breakdown when you think of the revenue limit. And it's kind of hard to see on the slide, but that the revenue limit is the crust. So the revenue limit is defining the size of the actual pie. And then there's only 2 contents within that pie. So if you're looking at this, it could be maybe red as apple, purple as blueberry, whatever your favorite pie is. But the contents of the pie is either your state aids or your local taxes. And so there can only be 2 fillings. The crust is defining the size of the revenue limit, and the only way that revenue limit can get bigger is something like an operating referendum or your enrollment changes or some exemptions, which we'll talk about later, can help to increase that size, but you're very limited in how you actually grow the size of your pie. And then the other thing in here, when we look at aids versus taxes, it has an inverse relationship. So if you get more aid, so say you go from 63%, it grows by 5%, you're not getting more revenue. The amount of taxes is just shrinking by 5%. So it has that inverse relationship. And so when we look at the breakdown of Germantown, you're sitting at about 63% of your revenue coming from state aid and 37% coming from taxes. So you're definitely you rely a little bit more heavily on state aid as opposed to property tax.
You have a question for
Sure.
you. I don't know if this is the right place or if it's even the right question for what we're talking about, but I've heard in the past that because Germantown has so much industry compared to Mequon, for example, that on relative terms, we're paying twice the taxes in Germantown for our schools as Mequon. Is there any truth to that? Because this piece of the pie here looks like we're paying about 1/3 of the bill and the state's paying 2/3. And it was insinuated that in the past, I don't know if it's true, that we were paying 2/3 and the state was paying 1/3. That's obviously not what your pie says, but it says, it was a deal where I thought Mequon was more in line with the pie here and Germantown was more in line with something else.
So I can tell you in Mequon, so it's very much based on the wealth within your district. So, and that's a weird way to put it, but when you think about values of properties, Mequon's property values are much higher. So when you look at Mequon's pie, they receive almost no state aid. And so they're almost 100% reliant on the local tax base as opposed to state aid. So, and it could be dependent on, again, I'm not familiar with businesses within Germantown, but I don't know if they're like within TIF districts or like that can play into that. But this is really the state looking at your makeup, and they're really looking at like that property wealth of your local tax base to determine how you fall state aid versus property tax.
Okay. It seems like some of the statements we've heard in the past might be false. In other words, we're being told we're being screwed in Germantown, for taxes based on, state aid. This says we're not. This says we're in pretty good shape, actually.
Sarah stated before that the revenue limit is extremely complex. So there's other things that we're doing that have changed this over years, not drastically, not like you're stating if you think it was completely backwards years ago. But the way that we're structuring our debt has changed this, that it allows us to have more aid than we do in property taxes. So it's slowly shifting. There are other things like the TIF districts that we have don't pay property taxes. So that's in there as well. So as they come onto the tax roll, you could see part of this changing. So there are a lot of factors in there that this is just simplifying the whole concept of the revenue limit. So there's more in it than just taxes and just worth of our school district compared to Mequon's.
Okay.
But when you think about the actual definition of what is a revenue limit, so the revenue limit is the maximum amount of revenue a district can receive from state and local property taxes. How much a district does levy is completely a local decision. So the majority of districts do levy to their maximum authority. That is ensuring that you're putting the most dollars possible and available to you into the classroom and into serving students. Admired and acquired from something that Wasvo had put out. But I think it's a really good representation when you think about how does the revenue limit come about. And it is that mix of state aid and property taxes. And then to actually get your property taxes, and we'll go through this a little bit, you're taking your revenue limit, subtracting off any aid. And that's how you eventually get to what the taxpayers are responsible for their school district portion of their taxes. What the revenue limit is not, I'm going to have trouble saying that word, I think, by the end of this presentation. So the revenue limit is not a spending limit by any means, and it is also not any type of guarantee of funding. So each school district, when you think about their makeup, has a different mix of aid and taxes. So when we talk about Germantown versus Mequon, they're neighbors, right? But they're so different in the amount of taxes versus state aid that they receive. And there's so many things that, like Brittany said, that go in behind the scenes when you're thinking about a district's makeup. A revenue limit, when you think about the total budget, the revenue limit can control anywhere from 70 to 90% of a general fund revenue budget. And we'll talk about how even the things that you would think that you have some control over, you don't have as much control over as you might think when it comes to making revenue decisions. So just a little history of revenue limits. So they went into place 93, 94 fiscal year. So basically what happened is wherever districts were spending at that time, they were locked into that number. And that's why you even see today, there's so much variance in what districts spend on a per pupil basis. And it really goes back to this 93, 94 decision. When you look at districts back in 94, you had some that were in the middle of, they maybe raised the limit because they were in the middle of a facilities project. So they were higher per student. You might have another district who didn't have anything going on. They were really low spending and they got locked into that. So it really is all across the board. The chart that I have on the right side just shows the entire state and kind of categorizes across the state where everyone at the time of last fiscal year. And this is important because this is a historical decision, right? A decision made in 93, 94 still is impacting us in 25, 26, and as we start to build our budgets for 26, 27. So this really starts that conversation about how the revenue limit really is, and you'll see it's based off of historical information and always it builds off of history and continues to be a challenge when it comes to budgeting. This is go ahead.
On that on that map that you just had up, it looks like some of the higher revenue limits are in some sparsely populated areas. What is
So they could, there's a myriad of reasons. So they could have an operating referendum or some type of referendum that's on there that's boosting up their revenue. Their enrollment could be different. Up north in those more sparsely populated areas, there is a lot of wealth there because of lakefront properties of that nature. So it really varies. One that we like to talk about in our area in CESA 1, and I don't mean to pick on them, but Nicolay always comes up in conversation because they're smaller. Like I think for 24, 25, they have just over 1,000 students. Yes, they're a union high school, but their revenue limit per member is like over $15,000. So it just, again, it really just varies. And that's why I think comparing to districts is easy, but can get so complicated because there are so many different variables that are going on behind the scenes, district by district.
okay?
I went back to 93, 94, Germantown's revenue per member. I just pulled out a couple key numbers on here. So when revenue limits went into place, Germantown was spending about $6,700 per student. So sitting a little bit above the state average at that time. So I should say the dark blue is Germantown and the orange line represents statewide average. The next number I would pull out is the 10,334. That is in the 2009-10 school year. And this year is important because this is the year that the revenue limit changes stopped being tied to inflation. So now any revenue limit change is coming through action through the state biennial budget. The third number I pulled out on here was 2011-12. So that was when Act 10 was put into place. And you can see the chart that I have to the right of that starts in 2011-12 and shows the revenue limit per member increase. The next column is the per pupil categorical aid. So the revenue limit per member increase is inside the revenue limit. And the per pupil categorical aid is a categorical aid that sits outside of the revenue limit. So you can see since 2011-12, 10 took away a lot of revenue from school district. Who were to calculate that out, and the decrease in 11-12 led to millions of dollars in lost revenue. And the idea behind that was that districts would be able to eliminate expenses. So we were losing revenue, but then we would also be able to eliminate expenses through like cost sharing for Wisconsin retirement system, as an example, restructuring health insurance benefits. So school districts were kind of forced into the opportunity of restructuring some of their costs. We end up evening out or kind of getting back to zero, back to positive right around the 23-24 school year. And again, this all represents changes that have come through the state biennial budget as far as increases. And right now for 25-26, you sit at right about $14,000 revenue per member. We're going to start getting into the weeds a little bit here. So when you think about the revenue limit, you have things that sit within the revenue limit, and then you'll have things that are outside of the revenue limit that still have to be added on to come up with your total property tax levy. So when you think about your revenue limit levy, so what is within the revenue limit, you have your general fund or Fund 10, and that you have your property tax levy, but you have to take out or taken into consideration any general state aids that you may have. The other fund within your revenue limit levy is your non-referendum debt service fund or Fund 38, and you have to levy enough in that to cover your principal and interest payments. And then the last one that sits within it is your capital projects fund or Fund 41. And so when we look at, just wanted to compare, this is actual levy amounts. And this, I pulled just CESA 1 districts. I took out anyone that did not have any levy, because not every district has a Fund 38 levy. Not every district has a Fund 41 levy. And then I did pull out, I pulled out MPS, Racine, some of those larger districts, just because they're way off the charts because they're just so much larger. But this is just a comparison of where Germantown sits, and you're that green bar, so the third one in from the left, where Germantown sits in comparison to what other districts are levying in Fund 38. And again, be careful with comparison data, because I'm going to keep preaching this. There's just so many things that go on behind the scenes and different reasonings for why districts have Fund 38 debt to begin with. Could be energy efficiency exemption. Districts were reorganizing and trying to pay off debt related to post-employment benefits and WRS. So there's so many different reasons behind why districts have a Fund 38 levy. Similarly, on the side of Fund 41, on this one, Germantown is the second one in. Grafton does have, it looks like 0 on here. They do have I think they did like $100 or something like that. And that is just so they have to keep levying in so it doesn't start over. So they just levied in a very small amount. But you can see here, this is a good example of how districts are utilizing Fund 41 in different ways to pay for their capital expenditures. And again, everyone's in a different situation. Some of them have facility referendums that are attached to this. Some of them have Fund 46 to complement this. Some of them do not. Germantown does have a Fund 46 complementing this, which we talked about last time, but just gives you an idea of within CESA 1 where other districts are sitting. So what is outside the revenue limit? There's a few different areas. So these revenues sit outside, so they're not increasing your revenue limit authority that you have to as part of your calculation to get your levy amount. And just because they're outside doesn't mean they give you any more flexibility. So when we think about categorical aid, so we talked about the per pupil categorical aid, right? That's set by the state. So we can advocate as much as we can to get that number where we think is fair for districts. But at the end of the day, it really is up to the state budget. Same thing with special education categorical aids. We can advocate for increased spending or increased amounts, very much dictated by the state, and same with transportation aid. The state and federal grants, those are very, very much static from year to year, unless there is a big change or more funding is put into it. Obviously, right now, there's a lot of questions and up in the air about what's happening, especially at the federal level with grants and how that will impact districts. And I think that Germantown and Brittany does a really good job of looking for new grant opportunities. So if something were to come up, determining if the district qualifies for that and going through the process to bring on new grants. Student fees, I think, is a hot topic. And I think something that every board in the state discusses at one point or another. And the truth of the matter with student fees is you can increase it, but you're limited by state statute by how much you can actually increase it. And if you're really looking to make up revenue, that really isn't the place that you're going to find to do that. So just another area. And then 2, that you do have a tax levy for referendum approved debt. So again, outside the revenue limit, but you'll see later we added on to get to our total levy. And then the same thing with the tax levy for community service fund in Fund 80. Okay, so now we're going to move into, this is where we continue to get a little bit more into the weeds. I'll show you some actual snippets from the revenue limit worksheet and walk you through it as best as I can. Please stop me with any questions that you might have. So really trying to take a complicated thing and simplify it as much as possible. So when I think about the revenue limit, I focus on these 4 main components. So you have to calculate, you have to start somewhere. So you have to have your base revenue. Enrollment is a key driver in your revenue limit. You have your per pupil adjustments that are coming from the state budget, and then you have exemptions. So we're going to focus on, I'm going to take you step by step through those 4 areas. So to even get to your allowable revenue, we have to, the simplified calculation. So you're essentially looking at your membership, which we'll define. You multiply that by your max revenue per member, which is a state calculation. You add on your exemptions, which the state also tells you what those are. And then that gives you your total revenue limit authority. So if we start with base revenue, so each district's revenue limit begins with a historical base amount, right? We're building from year to year. So we take our prior year's final revenue and use that to start calculating the current year. It represents the district's ongoing revenue authority. It carries forward from year to year unless it's for some reason adjusted by law, and it really serves as that foundation for all future calculations. So this is the calculation for Germantown School District for base revenue. So the base revenue for 25-26 is about 43.6 million. You see that on that very bottom line. So essentially what you are doing to get to this number is we're looking back at 24-25. We're taking all of the state aids for 24-25, adding those up, and then we have to subtract off the total levy for all levied non-recurring exemptions. And we'll talk about exemptions in a little bit too, but those non-recurring, because those are not base building from year to year. So we have to take those off. So that is how we determine our base revenue as we move forward. So I mentioned that enrollment is probably the most important thing when it comes to a revenue limit. The complicated thing with the revenue limit is that you're not just your membership. So let me back up a little bit. So enrollment is key, but the revenue limit uses something called membership to calculate how much money is generated through the revenue limit. Membership is not going into a classroom and counting heads. Membership is it's a calculation that's defined by the state. It's based off of a 3-year rolling average of full-time equivalents. So when we think about a kindergarten student, the kindergarten student is not worth 1 FTE, it's worth 0.6 of an FTE. 4K might be, or your 4K 0.5? 0.6. So a 4K student is also 0.6 of an FTE. So that is how students in Germantown School District and any district are calculated. The calculation includes all residents, and it also adds on 40% of any summer school FTE that you may have, and it counts any students that you have, and you have very few, under the new independent charter school FTE. So I think this is probably one, if you take anything away from this presentation, probably around enrollment, because enrollment is so key to the amount of revenue that your district receives. It directly impacts your revenue limit authority. And again, it's complicated because it's based on that 3-year rolling average. So if you see that increase in enrollment, that's awesome. We want that. But you're not feeling that impact all in that year 1, which is what you really need, because, right, all of those expenses that you need for that increase are hitting you in year 1. So the increase is nice, but it's not typically proportionate to the needs of your district. If you have declining enrollment, that changes your allowable revenue. Enrollment trends, when you think about the trend, more than just that single year matters. So you really have to make sure that you're using past data and also looking forward to see what you think your enrollment is going to do because of that huge impact on the revenue limit. Okay, so this is the next step. And so we've calculated our base revenue, and now we need to look at what our enrollment looks like. And again, we're looking at it on go ahead.
Just while we're on enrollment, can you talk to open enrollment and how that affects? Is that included in this, or is it just the district's natural enrollment ability?
So if you have an open enrollment out student, that is your resident, that resident student is counted for revenue limit purposes, but then you pay out. Yep, open enrollment in a district counts them.
I think that's a thought lost on many people when we walk down this path.
Yeah, that's a really, really good question. Okay, so before we can look at enrollment, before we can do the calculation for our current year, we have to look back at historical. We need to determine our base membership. So base membership for Germantown School District, we're looking at enrollment for 22, 23, and 24. So we're taking across the bottom that 3,886, 3,844, 3,826. We're taking the average of that to get to our base membership of 3,886. $3,852. I want to pause and just talk about per pupil revenue adjustments quickly because I think it's important when we talk about how we see increases in the revenue limit and it's not always proportionate to offset the expenses that we have. So the per pupil revenue adjustments that we see are authorized by the legislature on a per pupil basis. So right now, we're authorized at $325 per pupil every year until the year 24-25. Right now, I know that there's push in the legislature to have the governor support a veto of that in exchange for giving some additional revenue in other places. So it'll be interesting to see what happens with that. The other thing I would note about per pupil adjustments, which we always want to advocate for additional revenue for our school districts. And I think a reason why you see districts advocate for not only an increase in revenue limit per pupil, but also categorical aid per pupil is because in a time of declining enrollment, which Germantown School District is in a time of declining enrollment, you have a declining enrollment exemption on your revenue limit worksheet. Simply put, a per pupil revenue adjustment, if you're in a period of declining enrollment, kind of gets eaten up by that declining enrollment exemption because it really is just kind of backfilling as your decrease in declining enrollment exemption falls off. That per pupil adjustment kind of backfills that. So you're not, in comparison to a district that were in not declining enrollment, they would realize much more of that $325 per pupil than Germantown would right now. Go ahead.
Just to be clear, when you said 24-25, you're not talking about last year and this year. That's the 400-year.
Yes, the 400-year. Yep.
And that's the $325. Yeah. So for just an instant there, I took it as last year and this year versus 400 years out.
Yeah, 400 years from now is when it is set to expire.
Just so everyone knows. I think most everyone on the board knows that, but I don't know if people watching at home would know that.
Yeah, that's a good distinction. Thank you for that.
Yep, you are welcome.
Let's dial in a little bit on this. So that $325 per pupil is a conscious decision that this business office has to make a recommendation to this board, and we have to make the conscious decision to tax our citizens at that extended rate per pupil. Is that a correct assumption or understanding of the situation?
So yes, so we're allowed to tax to the levy. The max amount we're allowed, which this includes. So the state says you're allowed to levy this dollar amount, which includes 325 times how many students, with a lot of other information in there. If we choose not to levy to the max, you could say it comes for this part. We're still given this part. Does that make sense? So it's probably coming from somewhere else.
I think what I'll dial in right there is we aren't given anything. We are choosing to tax our citizens at a current rate. In this scenario, let's say everything stayed equal, we could then raise it by $325 per student, our pie size.
Yes.
That would be passed on to the local taxing authority, vacant any assistance of the revenues, the aid revenue side.
Yes. So if the $325 increases and our state aid doesn't increase, we are given the authority, or we are.
My point, what I'm trying to get to is that money comes directly out of our taxpayers' wallet, not anything to do with the state aid.
If your state aid doesn't change, correct.
Thank you.
So this is the next snippet of the revenue limit worksheet. And now we're moving to the 25-26 side, so current year. So if you remember back to this slide, we calculated that 3,852. So now we're taking that over to this side. And so what we do is have calculated our base revenue. We have our base membership from 24-25 that we're carrying over. We divide those out to then get the base revenue per member, which is right now $11,327.13. So then we have to add on that the $325 per pupil. So that brings us to $11,652 as our max revenue per member. The next step is we have to now calculate our current year, 3-year rolling average. So now we're taking it 1 year further. So remember, for the 3,852, we started in year 2022. So now that year's dropping off and we're adding on 2025. So we have the 3,844, 3,826, and 3,716. If we take the average of that, we're at 3,795 as our membership. She just whispered to me, that's people. A lot of numbers going on tonight. Okay. The other thing that I would just like to note here is when I look at, I just pulled some data when it comes to that base revenue per member. So looking at that 11,652 number. When we look at the state, so Germantown is sitting at 11,652. The lowest in the state is 11,037. The highest in the state is 26,363. And the state average is 12,540. So just kind of gives you an idea. There's some major outliers. You're sitting a little bit below what the state average is from a base revenue per member perspective. Okay, so we're going to take that 3,795 current year rolling average, and we're going to start plugging that into our calculation that we looked at earlier. So we have two parts of our calculation so far. We have our membership, 3,795. We're going to multiply that by that max revenue per member amount. And now we have to look at exemptions so we can get to our total revenue limit authority. When we think about our per pupil adjustments versus actual district costs, again, they don't always reflect actual cost of educating a student. They're very much policy driven and not cost based. And over time, district costs typically grow a lot faster than what our per pupil revenue increases are. So revenue limit exemptions. I mentioned earlier that there are certain adjustments that may increase a district's revenue limit. A few notes on exemptions. They're authorized by state law underneath the revenue limit calculation. They can increase the revenue limit authority beyond the base calculation, and they fall into two categories. We have recurring exemptions and non-recurring exemptions. And the type of exemption that it is affects your future revenue limit authority. So when we look at Germantown's revenue limit exemptions, we just have one recurring exemption, and recurring is base building. So those are the exemptions that you see that will carry over to the next fiscal year and be included in that base. So the only recurring exemption that Germantown has is transfer of service for about $96,000. And that just helps to cover the cost of if you have a student with special needs that moves into your district, as an example, and is a lot higher cost than you had anticipated, you can claim a transfer of service on that to help offset your costs. But the caveat to that is it's based off of prior, you're claiming it from the prior year into this year. As far as non-recurring exemptions, you have just under $3.2 million in non-recurring. So you have a declining enrollment exemption. You have a small adjustment for refunded taxes, which is very much out of the district's control. And a lot of the times we don't know it's coming. We just end up getting a letter and have the ability to adjust for that through our revenue limit. In some cases, you'll have you do have it in this year or prior year open enrollment. Again, very much out of control of the district. It just happens that through the timing, there was a handful of uncounted students within the district. And then the voucher, the deduction for voucher schools falls within a non-recurring exemption as well. And again, because recurring is base building, those non-recurring, so that $3.1 million is not base building. So you really have just that one opportunity to utilize those non-recurring exemptions. Okay, so we have our membership, our max revenue per member, and now we can add on those exemptions, which total over $3.2 million. So if you follow that calculation, you get your total revenue limit authority of $47,486,517. But we don't stop there. So now we have to actually get to we have to translate our revenue limit into property taxes. So what are we going to collect from our local taxpayers to actually support the district? So we're going to start with going back to that revenue limit levy. So we're looking at Fund 10, Fund 38, and Fund 41. So I just took a snippet of the revenue limit worksheet so you can see what it looks like. And also how, when we talk about how we have to take off or subtract off the amount of state aids, you can see how that happens in here as well. So we start with that. That 47,485,517 is pulling over from that calculation. The 25-26 revenue limit with all exemptions. That 18.3 million represents the total of the state aid. So we subtract off. So 47 million minus 18.3 million gets us to $29,099,342. And that is made up of, you can't see it, I didn't grab that part of it in the screen grab, but that is made up of Fund 10, Fund 38, and Fund 41 levies. I'm going to pause there. Does anyone have any questions on that? Go ahead.
It doesn't look like we're getting 2/3 of our income from the state in this picture. Boy, am I missing something?
Yeah, your pie earlier showed like 2/3 aid and 1/3 local taxes. And this, when you're only getting 18,000 out of the 47.
I'll have to go back and look at that.
Yeah, see, that original pie now might be the other way.
Hi.
We're gonna have to, look into that. We'll make a correction, and we'll have a preliminary. Yeah, we'll have a bullet point for the next learning session, I guess, if that's reversed.
Yes.
See, I think it might be reversed.
Yeah, I'll go back and look at my calculator.
And then it'll be worth looking at Mequon to see if what we've heard in the past, if Germantown is getting screwed based on our supposed massive industrial base we have here. I don't think Germantown has that much more industry than Mequon. It's just me. I don't know for sure.
The majority, Mequon's development was inside of a TIF still. I think when I left there, they still had 5 TIF districts. So a lot of the development hadn't even come onto the tax roll yet. But with them coming on, that just would have increased the property wealth. So from the state's viewpoint, because the more property wealthy you are as a community, the less money they feel that you need from a state aid perspective. But I will look at the pie and make sure I didn't flip it.
Yeah, and that's where we are in Germantown. They don't feel like we need that much because we have all this industrial base.
For test.
Yeah, this really doesn't have anything to do with our TIDs. They're called TID, David, in Germantown.
TIDs or TID.
Yeah. I'd prefer TIF myself, but that's not what, the Germantown people call. Hopefully we don't have any more of those either, but that's for another discussion.
Okay, so I will check the pie and we'll keep going. So we are at, from a revenue limit perspective, at just over $29 million. And again, that's made up of Fund 10, Fund 38, and Fund 41. Still not done. We have to keep going. Okay, so now this slide, I apologize, has a lot going on, but I really wanted to try and show the transition from, we're at that revenue limit levy of just over 29 million, but we have to add on the other work that we have going on, right? So we have those levies that are outside of the revenue limit that have to be included to get to your total tax levy and ultimately determine what taxpayer responsibility is for the part of the school district. So we start at that 29 million. And then we have smaller on my paper. I can't tell if it's smaller up here or smaller on my paper. So we have a Fund 39 levy of $16,447,806 that we add on. Community Service Fund, which is Fund 80 for $180,000. And then prior year, and this can vary from year to year, how much you levy for prior year, any potential chargebacks or uncollectible taxes. And again, that number is very much out of our control, and we usually just get a letter telling us what that number is. But it's good that we're able to levy for that, because we can get that revenue back, because it is an expense we have to account for too. You add now all of those together. That's how you end up with the total tax levy, which in the case of 25-26 is $45,753,148. And then down at the bottom, I just put what the calculation is to actually calculate out the the mill rate for the district. So you take your total levy divided by your equalized property value, multiply that by 1,000, and that gets you your mill rate for the district, which is $8.15. Go ahead.
I think this screen might be a good place to ask the question. So Fund 41 is our maintenance budget, I believe, correct? And Fund 46 is the 5-year planned maintenance?
10-year.
10-year.
Mhm.
Okay. And so Fund 46 is not in on this chart,
Correct.
and that's because it's coming out of Fund 10.
Yep. So Fund 41, you have to levy for. Fund 46, you can set a budget for it, and you can just transfer from your general operating fund, Fund 10, into Fund 46. It does not require a separate levy.
Okay. And is there an advantage to that other than we're planning, or what is the dollar and cents advantage to having Fund 46?
Fund 46 is, so we talked about this a little bit last time in the presentation around woofer. So Fund 41 and Fund 46 actually work really well together. But Fund 46, I think, gives a lot of flexibility for districts what might have capital projects that need to be completed. So it's tied to that 10-year maintenance plan. So the only projects that can be completed in Fund 46 are the ones that are on that plan. So when you think about using Fund 46 in conjunction with Fund 41, you have more opportunity for access to funds to complete these capital projects and potentially avoid referendum or a larger referendum than you might need. It's really nice too because Fund 41, because you have to levy for it, requires some level of pre-planning. Fund 46 is nice because if you have a surplus at the end of your fiscal year, you have until July 31st. You have until July 31st to make a transfer into Fund 46. You wrap up that fiscal year. So it just gives you a little bit more flexibility to fund it. Go ahead.
I also want to add that Fund 46 was created at the state level for school districts that are negatively aided. There are 3 levels of aid. There are primary, secondary, and tertiary aid. And if you're in a tertiary aid, part of your aid is removed. So it's they call it negatively aided. If you fund into Fund 46, that amount of shared costs that you put into 46 out of 10 every year is part of your shared costs. When you make the expenditure out of Fund 46, like let's say it's a large amount because you've been saving up, that is not part of your shared costs. So when you are looking at state aid, they say, how much are you spending every year? If you have one large amount because you're spending that Fund 46, the state will say, no, you don't need any money because you just spent a whole bunch of money. So spending a small amount each year into Fund 46 is better for when they're looking at the amount of state aid that you should be receiving than if on that one last year where you're spending the large dollar amount out of 46, you won't get hurt that following year, if that makes sense.
Yes.
Okay.
Yeah. So there's another reason for it. And just another question. You mentioned 3 categories. Which one is Germantown in?
Tertiary aid. Well, we're all of them. Everybody is secondary aided, and some go into tertiary aid. Not all of them. If you do go into tertiary aid, which we do, you then are losing aid. So the more we can get out of tertiary aid into secondary aid is better for the district. And we are slowly moving out of there, but it takes a very long period of time to do.
Okay.
Okay. Any other questions before we move on?
Equalized property value. How is a TIF or TID district impacting that? My understanding would be any property that's within the TID, any realized value that's been increased while it's in the TID isn't applied to that equalized property value. It will be once it comes off the TID, but while it's in there, which could be 20 to 30 years, it is not part of the formula, which overburdens anyone outside of that. Is that a correct thought? Because it's been explained to me both ways that yes, that's correct, and no, that's not correct. And it seems to be the entity explaining it, and you seem to be a fairly neutral entity in that conversation.
Yeah. So when the project is within the TID, it's not coming out. It's not part of your calculation. And so that's why it's important that and most every TID has a district representative that comes to those annual meetings. And those meetings are important because if the TID were going to close early, or if it was performing really well or not performing really well, that has significant impacts for when the TID does close on the impact on taxpayers, because of how that property value, that equalized value coming on, can impact the revenue limit calculation. Gosh, it's been a while since I've been on a closed TID, but I think the year that it closes, and correct me if I'm wrong, the year that it closes, it doesn't actually go on until the year after. So
You're correct.
requires a lot of pre-planning.
Thank you.
Yeah. Okay. So why do we talk so much about the revenue limit, and why does it matter so much for budgeting for school district budgets? So as you've probably learned through this, is the revenue limit does create a lot of constraints when it comes to district budgeting. So revenue limit authority doesn't keep pace with inflation, doesn't automatically tie to that. And we've seen, right, even in small businesses and other big corporations, right, everyone is feeling the impact of rising costs and inflation and having to keep up with that. Declining or flat membership limits your future revenue growth, right? Because everything is base building. It's based on history, and everything builds from one year to another. So when you have a period of declining enrollment, and if you start to come out of that, you don't feel that right away, which can be challenging. Because staffing is tied to enrollment in many districts, and staffing costs represent the majority of your budget as a school district. And then it can create structural budget gaps over time because of the fact that we're using that 3-year rolling average, and it's not increasing proportionately to the needs of a district. We started to talk a little bit about this when we think about looking at trends of enrollment, but really the timing and trends matter. So revenue limits often create that delayed and very cumulative impact when we, again, keep talking about how it builds off of history and what has happened in your district from a membership perspective. And this is why long-term planning really matters. So when we think about the work that the Germantown School District is doing, utilizing multi-year forecasting to look at not only what is our enrollment going to do, but what does revenue limit changes mean? When the state budget is talking about increasing $3.25 per pupil or increasing special education percentage, what does that mean for our budget? Not only in the year that we're looking toward, but several years after that. Long-term planning really supports proactive and not reactive decisions. So again, going back to the conversation of planning for Fund 41 and Fund 46, many times when districts are faced with budget restrictions and the need to cut budgets, one of the first places that people look, and it's really easy to look, is buildings and grounds, right? What roof can we not replace? And while that is okay in some situations, deferring maintenance can get really dangerous, and it can impact the safety of a school building for students. So the fact that Germantown has a Fund 41 and a Fund 46 as part of their planning is really, I think, really shows a lot of financial stewardship and pride in the community taxpayer dollars that we're utilizing.
I think, and just to kind of levy on that, and I don't like pointing out other school districts, but I think we can all see Arrowhead's issues currently. They have a significant amount of deferred maintenance, which has led to 2 failed referendums. And that's the exact situation this board is trying to keep this district out of from a financial mindset. And there's other things that play into it, so I don't throw that all on them. But it's just in the forefront. We see it playing out live right now with that district. So.
Yeah, I think any situation that you can, as a board, put yourself in to be proactive as opposed to reactive is going to be beneficial for you. And when we think about sustainability, so not only from a budget perspective, your buildings and your programs, sustainable budgets not only protect the district and really amplify the reputation of the district, you're protecting the taxpayers too.
I like your roofing example because, the old number was we were on a 20-year schedule and we had 20 acres under roof. After the referendum, that number is larger. I don't know what it is, but we would do approximately 1 acre of roof per year in the Building and Grounds Committee. And some districts actually borrow money to do those roofs when they know it's coming every year, including us. We know it's coming every year, and it doesn't make sense to borrow money and kick the can down the road, for those type of expenses. So we're not doing that in Germantown. I just wanted the citizens to know that we're not borrowing money to do roofs.
So talk through a few of these on the last slide, but I think that Germantown's approach to financial stewardship is really strong. You seem to be very intentional about your planning and your approach to the work. Just the fact using multi-year budget forecasting, working to align your staffing decisions with long-term revenue trends. That goes back to that forecasting what the revenue limit is going to do and how that's going to impact you. We talked about in last session about how you strategically use your Woofer funds. That's really important, getting creative and how you do that. And then just really always prioritizing your fiscal responsibility and really being that steward of taxpayer dollars is really important. So just some key takeaways from today. I know I threw a lot of information at you, but I feel like you guys kept up pretty well. So you asked really good questions. So thank you for that. So just some key takeaways. Again, that revenue limit establishes the district's maximum general fund revenue, and it's that combination of state aid and local property tax. Revenue limit impacts delayed because of that 3-year rolling average, and they're cumulative because they're built off history. Trends matter more than just a single year when it comes to calculating your revenue, and long-term planning is really essential in sustainable budgeting for Germantown. So with that, I will take any more questions that you may have.
Anyone? Yeah, I think if you can just take a look and confirm
Absolutely.
yea or nay on the pie chart there,
Yep.
that'd be good for us for next time.
Go ahead.
Just one question that went back earlier in your presentation. I don't know if you can slide back to it, but just a pie chart that we're talking about, that might be inverse.
That might be wrong.
And I think it's just inverse there, but that's okay. We can all easily understand it. We're dealing with a lot of new development in the village that isn't occurring in TIDS. As that revenue comes online, taxing revenue, right? Because as it's a developed property, it increases its value, its taxing revenue is greater. Can you walk through how that affects the district, or more specifically, the taxpayer from an increased revenue? So let's say we had a theoretical $1 million worth of revenue come online. We don't get, if our piece is $500,000 of that, we don't get $500,000 in expansion of our revenue limit. We just get to take that and decrease the liability across the other taxpayers within that. So their portion, their responsibility can be decreased. Now it's over a lot of rooftops at that point, but each development that does come online outside of a TID is decreasing their share of the pie that has to be paid to help support this district. Is that a correct thought?
So the revenue that is going to come on through those properties is going to ultimately increase the equalized value for the district. I should say too that, and I didn't put this on here, but there is a difference between equalized value and assessed value when we're talking about properties. So school districts under the Department of Revenue calculation utilize equalized value. And it is simply put, the equalized value is calculated. There's a factor applied to it by the Department of Revenue, and it's just meant to make it more equalized value across municipalities. So as more comes onto that equalized value, and it's not going to come on all at once, right? Think about if you're building a new home, your property tax in year 1 is based off of the land, essentially. So then the next year, that's when you start to see what the actual value of that property is worth. So it comes on slowly. And if you think about the calculation of how determine property taxpayers' portion, so that mill rate, if your equalized value is growing, your denominator is getting bigger, it's going to, even if your levy is potentially going up, your mill rate could still go down depending on how much that equalized value is increasing. So that's not a straight answer. I would say it really depends because there's other factors in that calculation, but realistically, your equalized value is going up.
But positive, responsible development
Yeah.
can drive the equalized value up, which drives the mill rate down. And what that
Yes.
means to our taxpayers is their portion of pay goes down as that responsible development comes on
Yeah.
line for the district. And I think that's a huge point for this district in general to understand. And I'm going to, at a full board meeting, have to talk about some development stuff that comes along and why it matters. And that's exactly it. So I just wanted to make sure while I had you here, that was my train of thought was correct in
Yeah.
that. Thank you.
So this is the first I've heard of equalized value versus assessed value. I thought they were one and the same. Is the multiplier the same for everybody across the district? And is it greater than one or less than one?
So the multiplier is applied by the Department of Revenue. I don't know off the top of my head what it is, but they use the same, like every district in the state uses the same calculation. And I can send Brittany, I have a really good just comparison slide of equalized versus assessed that I'm happy to have her share. If you were looking at your tax bill, or if a community member were looking at their tax bill, the equalized value is the fair market value on a tax.
Okay. So these days, I think it's generally higher than assessed value.
Yeah. Yep.
Okay. Very good. That's all I have. Anyone else? I think that's it. Thank you for coming tonight, Sarah.
Yeah. Really good questions. And I'll follow up with I and the equalized versus assessed.
Brittany, thank you for having Sarah and doing this.
Yep. I'll see you next month.
We still have more to go yet.